Let me ask first about your performance. It seems like a small number, but with such when you're working with such large figures, and as I mentioned, it actually beat the benchmark, it's an achievement. How did you get here? What was your strategy?
Okay, yeah, thanks for having us. So as you say, I think the third quarter for us was a tale of two halves. I think we, through the summer, saw a continuation of the good equity markets we saw in the first half. And you saw the interest rates falling as well. And then something happened in late August into September, where equity markets came down again and the interest rates started to rise. So overall, as you said, for the quarter as a whole, we ended essentially flat, which is an okay result for us. We did manage, as you say, also to outperform the benchmark by 25 basis points, which is a very good result, actually, with the kind of relative risk that we're running. So we're happy with that. But we're broadly invested in the equity markets and the bond markets, and we follow them closely.
Yes, you're broadly invested in equities, good morning to you, Trond, and in fixed income and in real estate and now in renewable infrastructure. Do you go looking for new asset classes at this point, with inflation becoming such a story, Trond, and returns available on fixed income markets maybe not delivering what you want versus inflation? Where do you go in an inflation environment like this?
Yeah, it's a good question. Not many places to hide, really. So we're kind of we're a very long-term fund, right? So the bulk of the portfolio is made up of 70% global equities, and by that token, we're owning 1.5% of all listed equities, essentially, in the world. And then we're adding a few asset classes. You mentioned real estate, which was added 10 years ago, and quite recently we added unlisted infrastructure for renewable energy as well. So those are new asset classes for us, which brings diversification and stability, and hopefully also some more inflation protection going forward.
Do you get a bit more experimental, Trond? I mean, we spend a lot of time talking about Bitcoin at new record levels. This might sound a little bit out there for a sovereign wealth fund, but we're hearing a lot of investors talking about how this is increasingly accepted, maybe just as a speculative asset or for some as part of their investment strategy. Do you have any conversations at all around crypto, Trond?
No, I think being experimental is not part of our DNA, actually. We're a very large long-term fund, so everything we do is very deliberate. We're not jumping on the latest craze or bandwagon. And so Bitcoin is absolutely not something that we're explicitly looking into. I mean, we're looking into the large asset classes that are out there because we have so much capital to deploy. We just need liquidity and stability.
Okay, so you're not necessarily interested in crypto, but let's talk more about your push into renewables and renewable infrastructure. Given that Norway also is attempting to get to net zero in the coming next few decades, how will that impact your management of the fund?
Well, it's kind of two parts to that, right? We're managing the fund as a surplus fund, so the first part is really a question of the balancing of the budget in the Norwegian government, and there the oil revenues still play a significant part. I think everybody in Norway is cognizant that this is a cash flow that is going to be falling in the years to come. So there's one debate being had, which is what is new oil, so as we call it here in Norway. What is the new industries that we're going to build here? The other part is and that's for the fund. Climate risk in general is a big risk also for a financial investor and a long-term investor like the fund. So we're actually working quite a lot with the companies, trying to influence them to be better at their disclosure, better at the target setting, and so forth. And then, as you mentioned, we have added the infrastructure on renewable energy, which is not to invest in a specifically green manner, but it's diversification, and we see that this is a growing asset class.
Well, obviously, climate is the E in ESG, and then there's also the SG, the social and governance aspect. How are you thinking about that, Trond?
Well, it's an integral part to what we do. We want to be a long-term responsible investor. And so this is actually something that's been front and center in everything we've done for the last 20 years, I would say. It's nothing new to us. And what we really do is to work on three pillars. We're we're working with different standard setters, regulators. Since we're kind of invested in the whole world, we think it's a good thing that if the bar is raised for everyone, it's probably a good thing for everyone, the world, and us as an investor in them. The second part we do is to make sure that we are an active owner of the companies. We own 1.5% and sometimes more of the largest companies in the world. So we have a very active dialogue, and we make sure that our voting is consistent with being a responsible investor. And the last thing, and not least, we do is also to slightly tilt the portfolio out of industries or sectors that we think are not on a sustainable path, and then tilt the portfolio slightly into more sustainable business models.